MTN is one of the world's largest, and of course we're bringing it home now. So this is one of the world's largest mobile phone companies with large businesses: Nigeria, South Africa, Ghana and Iran.
Exactly. It's got about 220 million customers at last count. Continuously updates that number. So remember, we've gone from 800 down to 220 million customers, but still a formidable player. Market cap 373 billion rand. Okay, so that's quite a lot less. We've come down the league tables in terms of market valuation.
Price to earnings ratio here of 13.1, dividend yield, a high dividend yield here of almost 8%.
Yeah, which is a function of the historic dividends paid. We know they've been very generous. Okay, so
let's start. All right.
Big business here in South Africa, doing very well in recent reporting quarters because Cell C is busy imploding, and we know it's got a strong position here. Nigeria, an election this weekend. Bit of uncertainty.
Could be a
oil
game
price
changer for the macro environment. The oil price coming down by 50% or so. That is the core of the Nigerian economy.
Exactly.
It
And then you've got a business in Iran,
revenues,
where they currently, for the end of this month, may be coming up with a deal to end sanctions and to reintegrate Iran into the world economy and allow them access to SWIFT again. All the money that MTN has made in Iran, and it's got a big business there, is locked inside of that country because it can't externalize the money.
So let's look at this share price graph here in a little more detail, Paul.
So it rolls along and everything looks fine and dandy until the problems start to happen with the oil price, and then people get anxious about Nigeria. It gets a little bit of a perk up in recent times because of the fact that the South African numbers, where it still has a big legacy business, are better than expected, and data sales better than expected. So I think it's one of those cases where you just have to keep rolling and see the big picture and believe that they've got a big addressable market in this context.
But now I want to talk a little more about the overall environment for the mobile operators in South Africa. You've got price deflation in voice and data, and you've got input costs going up, not to mention obviously the pressures from an Eskom perspective and how that is impacting the businesses. So latest moves from the CEOs across the board are that they are looking at a model where they share some of the input costs, i.e.
share towers and the likes.
Well, if there's, for instance, a diesel generator, instead of having 4 diesel generators where MTN, Vodacom, Cell C have all got equipment, they will share one diesel operator between the players in that space.
But they obviously have to be quite careful because they can't be seen to be colluding with regard to any element of their business. Yeah.
Exactly. So it's an interesting model. They
that
do
sounds
say
quite
that this is what they
sensible
do
to
in
me.
the international environment.
They do. In fact, they go further, and this is something that MTN is currently doing, is that they're selling their towers altogether. So they sell their towers to someone like American Tower, there's another big international operator, and then they lease them back for a long-term period. In America, people don't own towers typically. They have companies that own them that are structured like REITs, like property companies, and anybody and everybody can lease the tower or put infrastructure on the tower.
And it's a similar model over the fiber optic cables into rural areas. That's what's starting to happen.
Although obviously it makes sense to have some infrastructure of their own, but if you can think about it, if MTN has already owned a lot of that infrastructure and they can sell it out, then they get a big capital injection, and then going forward their return on equity is much higher. Look, we've had all sorts of problems. When you say deflation in terms of pricing, remember, I don't think that is a major problem because we've already seen the full impact of the cut by the government in terms of mobile termination rates. They can't get any lower.
I mean, it's a 50% cut in mobile termination rates.
So now they can't get any lower. And then on the other hand, we know that the product, like I keep saying, keeps selling itself. People use more and more and more data every year and make less and less calls every year. So there are challenges, I will give you that. But at a 13 PE, this business is not expensive, and it's pricing in quite a lot of bad news.
And you don't see this as a utility. There is that argument out there that the mobile operators are now utilities rather than high growth opportunities.
I don't agree with that.
You think it's a growth opportunity?
I think they'll continue to be a dominant player and that they'll have more and more and more revenues every single month.
Hot or not?
Definitely hot for me. The one thing I'm a little anxious about is that we could have a negative outcome in Nigeria with the election and lots of post-election violence.
Remember, you can watch CNBC Africa Saturday. We've got live on-the-ground coverage of the Nigeria election.
I will be watching that for sure. And then the other thing is we might see the Iranian nuclear and sanctions negotiations fall apart, at which point there could be more sanctions and everything could get more negative in the Middle East.
So let's just clarify, hot though, even with those
hot for me because you know what,
issues.
over the years we've lived through all sorts of news and nonsense and none of it made any difference in the long run. This is a great business, so definitely hot for me. The question really just is about the timing and the scale of the commitment.